Good morning and welcome to the Homestead CPA. My name's Dan Snyder. I'm going to apologize before I go any further in this video. If you hear some noises in the background, our bull is trying to become friendly with a new cow that's across the street from him. So I apologize if that interrupts our video. Today we're in part 3 of our 15-part video series talking about accounting, tax, and legal issues involved in homesteading. If you're new here, welcome. If you've watched some of the previous videos, welcome back. If you haven't watched them all, please understand each one of these videos is self-contained, and so you can watch them in order, out of order. You can just choose a topic that you like and watch the ones that you want to watch. Today, we're going to be talking about the thing that nobody ever wants to do or even have to deal with, and that is keeping records and keeping financial records. And so with that, the reason why this is honestly the reason why I started doing this video series. Nobody likes doing this job. I remember when we first started gardening, if it'd been up to me, I probably would have taken some seeds, thrown it out in the garden area, and then, come May, wondered why we didn't have any vegetables growing. Gardening takes planning. Thankfully, my wife is much better at this than I am. She has our garden drawn out. She has her planting calendar. She sends me to the store to get compost, to get the seeds that she wants, if she hasn't already saved them from a previous year. And all in all, we spend a lot of time preparing for our garden, just as I'm sure you do. So I'm going to tell you that the result that you get gardening, while it's not always dependent on your planning, you certainly have a much better chance of having a good result if you plan for your garden. The same is true for your financial books and records. If you'll spend some time planning for that and keeping some good records, then the results can be really beneficial for you. So what are records? What is bookkeeping? What financial records do I need to have? These are the questions that I get from my clients all the time whenever they're starting a new business. In the previous video, I asked you to consider what it is you are doing. Once you've determined what it is you're doing, because homesteading is so many different things to so many different people, once you know what you're doing, then you can identify what you need, what records you need to keep track of. If I'm raising cattle and I'm selling, I could have a cow-calf operation selling weaned steers. I could be selling feeder steers. I could be processing beef and selling processed beef. But whatever it is I'm doing, I don't necessarily need to keep track of my chicken feed costs if I'm not selling chicken. I need to keep track of my costs involved in raising the cattle. So the first thing that you have to do is identify, are these personal activities that you have been involved in, or are they business activities? If they're personal, then what you keep track of really depends on what it is you're trying to achieve by having records. If you, prior to your homesteading activities, had spent $500 a month on food, and now that you're homesteading, you realize you're spending $700 a month on food, that's fine. You've made a choice to spend that extra money because you believe the food is better food, better quality, better for you, healthier, and that's not a problem. But from your own personal financial planning perspective, you need to realize you're now spending $200 a month more than you were at the grocery store. Conversely, if you had been spending $500 a month and now you find you're only spending $400 a month, that means that you have an extra $100 a month that you can be doing something else with. So you don't necessarily need detailed records, but you do want to keep track of your expenses, even if it is just for personal purposes. But for those of you who are considering a portion or all of your homesteading as part of a business, then we're going to need to keep more records. So the first thing that I'm going to suggest before you start keeping any records is, if you're going to do this for a business, you need a business bank account. Now, it doesn't mean you need a separate legal entity. It just means you need a bank account. So go to your bank and say, hey, I've got this one personal account. I need another account, just another checking account. And use that account solely for all of the activity that you are going to make a profit with. So once again, if I'm keeping chickens just for personal consumption, then I don't necessarily need to keep track of that, and I definitely don't want to pay for it out of my business account. I want to pay for that out of my personal account. So having those records for business purposes is important. Why? Because if you're making a profit, Uncle Sam's going to want to know about it, and you're going to need to be able to provide these records for him. So the first thing that we're talking about is records. Records are proof that something existed. So if I say I spent $100 at the feed store, Uncle Sam is rightfully going to say, well, prove it. And so I pull out a credit card statement that shows I spent $100 at Tractor Supply. Well, Tractor Supply sells a lot of stuff. So that doesn't actually tell the IRS. It tells the IRS I paid them for something. It doesn't tell them what I paid them for. So I'm going to need to keep that receipt. Now, you may buy a lot of things at Tractor Supply and use their annual summary, which, once again, that's a great thing to do. But not everybody does that, and so keeping receipts is important, and you're going to want to keep those for 4 years. Personally, we use an 12-month expanding file, and if I spend money in January, I put that receipt in January. If I spend money in July, I put that receipt in the July column. And then you tie them up at the end of the year, and you keep them in case you ever need them. So that's step one. That's the record. If I buy a new tractor implement, if I get a new hay spear, if I get whatever it is, I want to keep a record of how much I paid for it, and I can put that in. If I buy a new hay spear in June, then I'm going to put that in the June slot, and that's the first part of it, is proving that I actually got something and that it was a business something. Then the second part, as I mentioned earlier, is proving that I paid for it. So how do I do that? Well, some things, I may go buy a bunch of hay and I pay cash for it, and I get the guy to give me a receipt and he writes cash on it, and I get a date and hay written on it. So I've got confirmation that I bought some hay and how much I paid for it. So these are things that we all get, but we need to make sure that we keep them in an organized fashion. And so showing A, that it was a business expense, and B, that I paid for it, is what I need to be able to confirm with the IRS that I spent this money. Same thing's true on the income side. If I sell a steer at market, what am I going to get? The market's going to give me a receipt that shows how much it weighed and how much they sold it for and what their fees were and how much they paid me, and that's going to tie to the check that I deposit in my bank account. So whether it's an item of income or whether it's an item of expense, keeping track of the amount and what it was for is important. And so that's why we have records. Now, those records could be just a sheet of paper. More than likely, and starting off, depending on what you're doing, that may be all you need. You may not have a lot of receipts. You may not have a lot of deposits. So that's fine. But if you get into a little bit of volume, then something like an Excel spreadsheet may help. Now, on our website, thehomesteadcpa.com, in the services section, there is a link to an Excel spreadsheet that I've used with many of my clients. In fact, I expanded on it specifically for homesteaders. And I've got a lot of categories in there that may or may not be appropriate to you. And so if you don't need them, fine, just blank them out. That's the wonders of Excel. Just cover up the parts you don't need. Because many people have many different activities. You might say, I'm into chickens. Well, what does that mean? Does that mean that you're selling eggs? That you sell eggs to people to eat? You sell eggs to people to hatch? Are you selling baby chicks? Are you selling full-grown chickens? Are you selling a specific breed? Are you selling a processed chicken? Are you selling parts of a processed chicken? All of these things are different, and you're going to want to know not only what the income is from each of these different activities, because it'll enable you to decide how best to spend your time. If I can make a lot more money selling chicken parts than I can selling baby chicks, maybe I should focus my efforts on selling chicken parts. So it doesn't mean that you have to do anything. It just means that you can track what you're doing and what makes most sense for you. Okay, so keeping track of that is important. Once you've got those records, then you can provide those records to your advisor, who can help you identify additional information that you may need, or he can help you plan for the future and to minimize your taxes. So there's basically 5 categories of things that you're going to want to keep track of. The first is income, and we talked about that. And generally, most homesteaders, unless you have maybe a stall or you go to a weekly market, you're not necessarily going to have a lot of deposits, but you want to make sure that you deposit all the money that you collect from your business into your account. And so if you've got one business bank account, then other than any money that you put in to get the account going, or maybe to cover some expenses, everything else should be income. Don't put any casual money in there. Don't put your birthday money or your Christmas money in there. Just use it for business. But then we keep track of the outgoings. So what are the outgoings? Generally, they're going to fall into one of 3 categories. The first is, hey, I took money out because it's mine. Okay, that's not a deductible item, but you need to keep track of that so that you know you took that out for personal use. The second may be an expense item. So an expense is a business thing that you purchase that is going to last for 12 months or less. So if I buy feed, I know that feed is not going to be here a year from now. But if I buy a new hay spear, that's not going to go away after 12 months. So rather than refer to that as an expense, we would refer to that as an asset. And so we keep track of expenses separately from assets. And you can see on the spreadsheet that I've got linked how that's done. In addition to the spreadsheet, if you just get really, really voluminous, you may need to move up to something like accounting software. And there's actually a very good new software called FarmRaise. And I'll have a link to this below for discount. We've got 20% discount for people who watch this video. Please feel free to use it if you're interested in it. And basically, it is if you will, an easier version of QuickBooks that is specifically designed for people in homesteading, for farming and ranching and people like that. So there's different ways to do that. But like I said, you're keeping track of, is it an expense, which means something that's going to have a useful life of less than 12 months, or is it an asset? And we keep track of those separately. The last thing that you're going to want to keep track of is mileage. Now, it's not something you're writing a check for, but you need to keep track of your transportation expenses. And the key to that is tracking mileage. So in our spreadsheet, we have that built in where you can have your beginning mileage at the beginning of the month, your ending mileage at the end of the month, and then you can track how much of that was for business, how much of that was personal. Because one of the most valuable expenses that you can get that people mess up is the transportation or mileage expense. It's also the first thing the IRS tends to disallow if you're ever audited. They're just going to throw it out and say, prove it. So you need to be prepared to do so. So these are the things that we're tracking with our records. I do intend to do a separate video, not necessarily part of this series, but a separate video, and show you actually how the spreadsheet is used, how the FarmRaise software is used. So a little bit of hands-on, but it's really outside the scope of today's video in this series. So keeping track of income, keeping track of your expenses, make sure that you don't lose out any benefits that you might need, because none of us want to pay extra taxes. But remember, even Jesus paid taxes.